And right now we're going to turn to business. There's been a big drop in the projected U.S. budget deficit, has many rethinking that both spending cuts as well as tight tax kite has them rethinking tax hikes. There we go. Our business editor, Andrew Schmertz, explains what this all means. It seems like good news, Andrew.
It certainly does, and let's start with the numbers. You know, it wasn't that long ago that the U.S. deficit topped $1 trillion. So this was a little bit of a surprise. The Nonpartisan Congressional Budget Office has come out with its report for fiscal 2013, which ends in October. They expect the deficit to drop by a staggering $200 billion to $646 billion. And this chart sort of illustrates the last 13 years. You'll see in 2000 and 2001, we actually ran a surplus. The government made money. Then we pumped, then the economic collapse happened, the housing crisis, and we started pumping a lot of money into the economy through the surplus. That increased the deficit, and you could see the red bars starting to increase there, dramatically increasing around 2007, 2008, 2009. And the last bar there, you could see a pretty good pullback. So how significant is all of this? Well, first, in April of this year, as I reported, the government made money. We brought in $113 billion, and that helped bring down this deficit. Second, in 2009, the U.S. deficit was about 10% of our gross domestic product. That number was scary to a lot of folks. Right now, it is 2.1%. The CBO does expect that number to start rising a little bit, but right now, it's looking pretty good. So where is the money coming from? Well, first, revenue. Tax revenue is up. Why? Well, we did raise tax rates on payroll in January, but also companies are reporting more tax revenue, more earnings. The stock market has been going up, so there's capital gains tax money that is coming in. Second, spending is down, but not from the recent sequester. The spending is down because of budget cuts that were already set for domestic and military cuts. So for the time being, this will take the pressure off Congress to do something about the debt ceiling. The CBO now expects the government to technically run out of money in the fall, not in the summer.
I want to ask you a question about this, but I also want to bring our guest host in because this is definitely in his wheelhouse.
Well, this is good news. As a matter of fact, at least one state in the country, California, just announced a $1.1 billion surplus projection. And so this is very interesting, and I think it points to the fact that not only increased revenues, but to some extent some measures around tax increases. A lot of things are at play here. And so we're moving in the right direction.
And Rick mentioned something important about California because I think we're starting to see the housing market come back in California, and that's a big part of the tax base for states. There is a downside to this, according to some economists, though. One is job creation. So this has always been the debate between liberal and conservative economists that we should run bigger deficits to help create jobs, and that further deficit cutting is going to hurt the creation of jobs, and that the stimulus also helped. Also, you know, this just gives Congress an excuse to dilly-dally around a little bit more on addressing the debt issues because now the pressure is off a little bit.
But how much time do they have? That relief of pressure is only going to last but so long.
It's only going to be possibly a few more months. So the number is coming. And finally, if you earn your income from fixed income or you have investments in bonds, this is going to keep interest rates low. There's less competition for the government to go out there and get money. It needs less money. And so analysts now expect interest rates to remain below 2% on Treasury bonds.
I want to ask both of you, and you guys answer, whoever wants to jump in, but you talked about the difference in the conservative and liberal ideology around the size of the deficit. Does it make any difference that we have this very fragile recovery going on? Does the ideology change at all? Or the impact of the deficit?
Well, I mean, I think regardless, I mean, the deficit issue has existed for years in this country, and it will. I mean, this is a big deal, and it's one clearly that President Obama certainly supports. The idea of closing the deficit is not just raising taxes, but it is making spending in areas that spending cuts in areas that we need to make, but not impeding job creation, growth, in areas like education and those areas that are critical to America's economy. So it has to be a balanced approach. And I think this is where we often see Congress or conservative versus liberal ideologies come in at play in terms of what is the balanced approach, what is the right formula, the right mix to close our deficit and get our economy moving again.
This number is a reflection of going back how far? Can any of this be credited to the sequester?
The CBO says no, that they already factored in those numbers. So they say this is based on the increased revenue largely and other spending cuts that were announced, but not the sequester, because the sequester will eventually end. And so they've already factored that in.
When you talk about these numbers, can you translate what that means? For example, the person who is doing their grocery shopping, paying their electricity bill. You know, we saw the Dow reach record highs, but there is still very much a disconnect when it comes to the man on the street, as we often refer to. How will this news translate to the rest of America?
Well, you know, one is the interest rate environment. So the interest rates will remain low, and that might help continue the housing market. It will also hurt people, like I mentioned, on fixed income. There is the argument that some economists have put forward that it's going to hurt job creation, and so that might impact people. But I think it's more of a political story. Rick could talk about this, whether this takes pressure off the president a little bit from conservative critics to cut further. I mean, he just theoretically reduced the deficit, he and all the government, by $200 billion. And I wonder whether the money is coming from these government cuts or whether it's simply coming from businesses starting to produce.
Yeah, well, I think we'll look to see what happens on the political front. But clearly, I mean, again, this is a big issue. It's a step in the right direction, but we still have a long way to go to be able to close the deficit and keep America's economy moving in the right direction. So, you know, I think it is good news for the president and for Congress and for all of other stakeholders who are at the table around deficit and budget and issues, and even the business community. But I think the challenge is to keep the momentum. And let's continue to find ways to close the deficit, create jobs, and keep the economy moving in the right direction.
What surprises me a little bit about these numbers is how quickly they turn around. Because the economy of the United States is so big, and you would think that it's like a big ship that it takes a slow turn around, but it seems like it moved pretty quickly.
Very, very interesting.